Good morning everyone, I am Tridin Biho and we discuss about national taxes. The taxes imposed by the national government of the Philippines include but are not limited to. There are 7 taxes. First, income tax. Second, estate tax and donors tax, value added tax, percentage tax and excise tax, and the last is documentary stamp tax. First, income tax. An income tax is a tax imposed on individuals or initiates in respect of the income or profits earned by them. Income tax general is computed as the product of a tax rate times the table income. And second is estate tax. Estate tax is a tax imposed on the transfer of the estate of a deceased person. It is leveled on the estate before it is distributed to the beneficiaries. The tax is based on the total value of its estate and can vary depending on factors such as the size of the estate and the relationship between the deceased and the beneficiary. And the second is value added tax. Is a consumption tax levied on the value added to goods and services at each stage of production or distribution. It is ultimately borne by the final consumer but collected at each stage of the production. And distribution chain VAT is typically expressed as a percentage of the selling price and is applied to a wide range of goods and services. And second and third pala is percentage tax, also known as a turnover tax or gross receipt tax, is a type of tax imposed on the gross sales or receipt of a business or individual rather than on their net income. It is usually calculated as a percentage of the total sales of receipt and generated by the taxpayer. Percentage tax is often applied to business that are not subject to VAT or income tax or to specific types of transaction. And next is excise tax. Is a type of tax imposed on specific goods such as alcohol, tobacco, oil, and certain luxury items. It's a typical included in the price of the product and paid by the producer or seller, but ultimate pass on the customer. Excise tax are often used to discourage the consumption of certain products or to raise revenue for government programs. And the last is documentary stamp tax. What is documentary stamp tax? Documentary stamp tax is a type of tax imposed on various legal documents such as deeds, mortgages, licenses, and contracts. It is usually based on the value of the transaction or the amount of consideration involved. Documentary stamp tax are typically paid by the party responsible for creating or executing the documents such as the buyer, seller, or lender, depending on the specific type of document and the jurisdiction regulations. Then these taxes help generate revenue for the government and often used by fund public services and infrastructure projects. So, yan ang 7 taxes na dapat nating malaman. And local taxes. Local taxes, one of the main source of revenues of the local government units, is the real property tax, which is a tax imposed on all types of real properties including lands, buildings, improvements, and margins. And another source of revenues are local ordinance such as parking fee and other etc. So, yan lang po at maraming salamat.